From aviation to what's happening in the world of sea. Let's go across to the management at Shipping Corporation of India. K Joshi, CMD at Shipping Corporation, is now with us. Ma'am, could you just talk to us about, more than the numbers, what is the sense that you get in the month of November, December and Jan? Are things picking up? You get a direct impact of really what's happening in the corporate world, what's happening in the world of demand. What is the sense that you get?
In terms of November, December and January, since we are already now into February, let me tell you that the numbers have started picking up. There is an immense upsurge that we are seeing in demand, both for consumer goods as well as for industrial products. And consequent to that, you are suddenly seeing that an unprecedented rise in the container segment is there. Container freight rates are skyrocketing currently, all because of the demand and supply imbalance. There is an equipment shortage which is further pushing up the freight rates. That's on the container side, which is primarily because of the lockdowns opening up now, economies opening up towards activity. Demand is picking up, which is impacting the freight rates. While the container segment is doing very well, we simultaneously see that suddenly the tanker has completely bottomed out, and currently the very large crude carriers are taking such a large hit that they are not even able to cover their operating costs. So while the consumer goods segment is going up, there is a slight improvement in the demand for crude that we are seeing in China. But suddenly the levels are not what they should have been. In the last quarter, that is obviously evident even in our financial results, since the tanker segment happens to be a very strong segment for Shipping Corporation of India. Because of the freight rates being bad in the tanker segment, this particular segment has not performed very well. On the third segment, which is our technical and offshore, that is also crude prices are picking up, but it is still limping back to normalcy, not looking very good. So bulk is, of course, more or less stable because once the economies are opening up and manufacturing activities are picking up, coking coal, iron ore, as well as from China, there is a great import and demand for grains. So that is more or less giving us a very steady outlook for the bulk segment.
Right. Ma'am, I just wanted to understand, you said about the tariff rates that are actually going up or that are skyrocketing. Can you tell us what would be the impact as far as the capacity reduction is concerned, or capacity is now operating full around the world for container and ships, and that's why these rates are for real?
In second half of 2020, we had actually seen a lot of blank sailings. We had seen that port calls were getting missed simply because there was no demand. So the lot of container vessels were actually idling. So after that, in the last quarter, what we have seen is, like I told you, the demand has suddenly upsurged, because of which all vessels are going full. Containers are in short supply, in great demand. The requirement of the cargo bookers, which is normally for the spring season and for the summer season, is also being booked in advance because they are so unsure of the likely availability of space on vessels. And that is further pushing up the demand on equipment is a very big issue. The equipment is all currently stuck up in the Europe and on the western side, primarily because lockdowns, because of the second wave and the third wave are happening there, while the suppliers are plenty, manufacturing sufficient quantities to supply. So there is a complete mismatch. While the boxes are currently required in Asia, all the boxes are held up. There is a lot of port congestion on the Europe side as well as on the US western coast.
Right. When we just talk about way ahead, what is the sense that you get with commodity prices all across the world going up and commodity being the main, transport for any of the sea players? Do you expect that these prices are not likely to come down because the demand for the underlying commodity product, including crude and some of the others, seems to be very, very high?
You are absolutely right. I expect that at least for the forthcoming quarter, the prices are going to remain high. Maybe it spills over even into the next quarter. However, as we know, market forces come into play and demand and supply is sooner or later going to equate and normalize, because these unprecedented imbalances that we are currently seeing are not on sustainable basis. So we all realize, we had seen that in 2020 when suddenly the prices for VLCCs had shot up to $240,000 per day, which is currently down to almost $960 per day. So there was a time when there is a short window when you see sudden imbalances in the market, but sooner or later it evens out and balances out. So I think this is again a short-term phenomena which is going to be there for us for another 4 to 6 months, but not sustainable longer than that.
Right, ma'am. Ma'am, also I wanted to understand, one thing. How are freight rates a reflection of economic growth worldwide? I mean, you've been into this business for really long. Whenever freight rates shoot up the way they are, what do they point out about economic growth?
I'd like to inform you that, as you know, that the recent World Economic Outlook is out, where they have given the GDP numbers as very attractive. India is at about 11.5%, China is at 8%. So all economies for 2021, the numbers are coming out to be quite good, which is very, very natural after the lockdown, considering that there has been a complete shutdown. Economic activity is definitely going to pick up in 2021. Once economic activity picks up, trade picks up, obviously it's a direct impact. Shipping is a derived demand. It directly comes and impacts the freight rates. You very rightly put it up.
Thank you so much, ma'am, for taking out time for us. Always good to get perspective from you. All the best for Q4.